Evening, everyone. This is video number 760. It's your closing comment for Monday, May the 17th. And it was kind of a quiet day. There wasn't a lot of news, except, of course, the AT&T Discovery news. But as far as the early morning stuff, we had Asia and Europe down on COVID issues. We had the Colonial Pipeline being back to up and working. We had Twitter talking about the possibility of some tiered services, including a $2.99 service. We had the NAHB, which is Home Builders Index at 83 versus 83. And we also had some disappointing Empire State Manufacturing. It was estimated at 25. It came in at 24.3, so it missed the estimate. But on top of missing the estimate, it also was a full 2 points lower than April. April was 26.3. Current month 24.3, so not terrific. Tomorrow we have housing starts and building permits. So the big news of the day was the AT&T Discovery merger. It's not actually a merger between those two, but AT&T, through a tax-free spin-off of its subsidiary, WarnerMedia, is going to merge with Discovery, and it will be tax-free for the telephone people, which is kind of strange since 3 years ago, telephone paid $85 billion for WarnerMedia. They're getting approximately $43 billion in value for this. The new company is going to be 71% owned by telephone shareholders and 29% owned by Discovery shareholders. The street loved the deal when it was announced. Telephone was up as much. Well, it traded as high as almost 34. The high during regular market hours was 33.88. The low was 30.02, and it actually finished the day at 30.05, down $2.19, or 6.8%. I'll explain the why of that in a second. Discovery was up over 6 and traded 39.70 in regular hours. It actually traded over 40 in the pre-market, and came all the way back down to 33.43 and closed 33.68, which was down $1.97 or 5.5%. So both of these stocks were up huge on the idea that this was going to be a great deal, and to listen to the CEOs try and spin it, it actually did sound like a good deal. Until it came out that Telephone, in order to help build this company, is going to redirect a bunch of its cash flow. And the way that it's doing that is it's cutting its dividend in half. So Telephone goes from 6.4% yield to about a 3% yield. So that was the first part of it. Same thing with Discovery. I mean, it's kind of interesting because WarnerMedia owns a great deal of fiction. All of the movie libraries. Remember that this company also owns Turner Movie, TCM, Turner Classic, TNT, HBO Plus. So they have this big fiction area. Discovery has nonfiction in spades. I mean, really great. And the other two legs of the stool tend to be sports and news, both of which this combination would have. So it looks really good on paper. It's overvalued, and telephone is taking a beating on it. So we'll see what happens in the days to come with some of the other streaming companies. Amazon was up 48 today, 47, 3270.39, up 47.49 or 1.5%. They had just some interesting news all day. They're going to give Amazon Music people Amazon Music HD at no additional charge. They've initiated an employee wellness program, which takes into consideration all of the negative press they get about working their employees so hard. And they're also going to have a medical diagnostic division. So tests from home, send them into Amazon, get your results. The indexes started the day off slow and down, and all of them actually came back pretty nicely. In fact, the Dow was down only 54 or 0.16%, and the NASDAQ, which was down well into triple digits, finished down 93 or 0.38. Both of them were 1.2 to 1 up internals. Volume was lighter. I saw the S&P down 30. It finished down just 10.56 or 0.25%. And the terribly lagging over the recent past, Russell was actually up on the day, not much, up 2.5 or 0.11%. And the transports were down 84, also 0.5%. So not a lot of changes, not a lot of volatility, just, working off the Thursday, Friday rally, declining volume, opening lower, and then just fighting back all day. What was really interesting today was much more the futures. Between the inflation stuff from last week and all of the weekend news about fighting in the Middle East, gold started off slowly last night, up 10 or 12, silver up 18 or 20 cents, but they really took off during the day, and the gold closed up 29.5 at 1867. And to give you a little bit of a look at it, it was actually a pretty impressive day. I think the silver was more impressive, but this was, you can see, we really came through here. We went right through. This green line is the 200-day moving average, which has really kind of held us in check up until now. But we really looked pretty strong today. Let me get rid of that box. Show you a little bit more here. As you can see, we've been consolidating. We had this little double bottom, moved up, consolidated, rode right along that 20-day moving average, and continued higher today. Tonight we're up about $1. It's actually a little bit more impressive in the silver, and I pointed this out in our Discord room. And the silver tonight is up about 11 cents, but it was up today 91 cents. And what I find interesting is that if you look at all of this from the high back here, all the way back in September of last year, and the decline and all of this consolidation, you don't have a close since this blow-off high where we closed at 29.41. We have not had a high close higher than way back in here. I will show you, blow it up a little. We have not had a close higher than right here, which was 27.92, and then this one at 27.66. We don't have any closes higher than right here, 28.08, and we blew right through that, closed the day today 28.27, and we're, as I said, 28.38. We haven't had a close higher than this since the blow-off high, which was 29.41. So, we could pretty easily, if we can get through this 28.42 and a half high today, 28.43 and a half. If we could go decidedly above that, we can challenge not only this 29.15, but the close here at 29.42. So, and we're in the calls here, the 24 and a halves on the SLV. For those who didn't, I addressed this in this weekend's letter. We had some people who got out between $1.36 and $1.46 on the 100% up rule, but we did have a bunch of people who didn't. Those people got out today at $1.56 on the 100% up rule, and then they actually closed higher than that. They traded as high as $1.77, and they closed $1.70, up 65 cents. So it was a pretty solid day in the futures. We also had the big move today, aside from the gold and silver, of course, was Bitcoin. And it came down hard, and it's down again tonight. For the day today, excuse me, it was down 6,130. And tonight it's been lower yet. This has been in a trading range here on the weekly. I'll show you what I was looking at. I've been defining it as in this bottom range of 44 and a half. So 44 and a half up to about 60 and a half. And we came close to breaking it on Friday, hit the 20-week moving average and closed a little higher, and then today lower again. Tonight's low, or today's low, was 42,050. So we're back into this area where we consolidated for the last break to the upside. We'll have to see if that holds. If it does, I think we'll rally back. Right now, I'd say it's 1-to-1 risk reward between, let's call it, 38,500 and 48,500. So kind of a strange area. All right, everyone. How could I forget nat gas? The nat gas so clearly broke out and is up another $1.40 tonight. This chart is a beauty. We have Telluride, Tellurian. This is the weekly that I published in the letter. I'll show you what the daily looks like. It's even more impressive. We consolidated across for 1, 2, 3.5 weeks before starting up. We opened through the high of last week, overnight last night, at just under 302, and we got all the way up to 315, closed at closed at pretty close 315.40, and we are slightly higher tonight, up another $1.40, 318. So looks like we're going to test this 320 area. Should be a lot of resistance up here between 320 and 330, but as I said, a really nice move after coming down and testing that 20-day moving average also. All right, everyone, I'll be back first thing in the morning. Have a good evening.